What's going on, everybody? Jeff here. Welcome back to the channel. If you are a trader who is still struggling to find consistent plays, if you're jumping from strategy to strategy, if your chart is cluttered with all these lines and you have no idea on a sense of direction on where the probability of a stock is going to go, this video is for you. Over the last few years, I have really simplified my trading strategy and my technique. The reason being is because the simpler it is, the easier to execute. I've had a lot of people reach out to me asking for how do I chart? How do I formulate these plays in the morning? It doesn't take a lot of time. Obviously, trading does take effort, work, consistency, most importantly, discipline, not just discipline in trading, but discipline in your life. All right. If you're not somebody that can say no to the cookies or say no to the beer on a weeknight, trading might not be for you. It is not just what goes on behind the screen at your desk. It is what goes on inside your entire life. But in this video, I want to break down the three most important things when it comes to formulating a positive strategy. We're going to talk about how I exactly chart these out and find them, why the probabilities are with you, and why the risk reward is amazing. So let's get right into it. So if you've been following my channel for quite some time, you have seen that my charts are very, very simple. I don't have a ton of trend lines. I don't have EMAs. I do have the RSI and the MACD at the bottom of my screen. And honestly, it's probably been years since I even look at them. The reason being is twofold. One, if it was as easy as following a MACD crossover, everybody would be rich. Two, the RSI, I learned this from a very, very positive, strong, and profitable trader. He said, what is low can go lower, and what is high can go higher. I don't tend to look at these, and it just gets to be just too much. I find people are always looking for multiple different indicators in order to confirm, their thesis. And the first thing I want to say about indicators, no matter what you're using, is 99% of them are lagging, which means by the time an indicator shows you a move is present, the move has already occurred. It's a lagging indicator, okay? 99% of them are. I use a couple different things. One, I use key levels, I use price levels, which are manually drawn, and I also use supply and demand, which is another, indicator or charting technique that is manually done, okay? I can literally jump into my computer about 45 minutes into open, read some news, get some feeling just how the market is moving. Once you start to really read the news, okay, and just see what is going on, from an economic standpoint, what is going on in the news, you're gonna get a little feel on how, what the sentiment is. Are we bullish on the day? Are we bearish on the day? Now, I never let that bias trump the charts to me. I always wait until a chart shows me direction before I get into it. But one of the biggest things I use is supply and demand. And there's a couple reasons for this. The number one reason being is, and remember this, is the risk reward is in your favor. And what I mean by that is your risk is much smaller than your reward. When you are playing supply and demand zones, you are playing the opposite trade. If I zoom in here and you see my zones from this morning, which we will talk about in just a moment, you can see that I'm looking to get puts up at a high and calls down at the open. If you don't play options, that's fine. You can still long and short the stock as well. If you do play options, I don't really use 0-day expiration. It's just not really, they move a little bit too quickly for me. Maybe little lottos, but I really try to stay to a few days out, a little bit out of the money, and it gets me comfortable to where it doesn't move too quick and I'm confident in my decision making. But therefore, if you can see, I'm looking to play the opposite, which means the stock is moving upwards, okay, which calls would be increasing, puts would be decreasing, and I'm looking to grab puts up at the high. The best thing, like I just said, is the risk reward, meaning if I break over that zone, I immediately cut my put, I take the loss, and I move on. Okay, but I take the loss very quickly. I'm not buying calls up here, having the stock go all the way down and seeing if it's going to come back. And therefore my option contracts are already down 40, 50, 60%. No, I really get out of them. Actually, from journaling, I get out of them at 18%. That's my average loss is about 18%. Okay, so your risk reward is very good. The second thing that we talk about is how to be able to chart these. It's very simple. There's a few different things I use, okay, a few different time frames, but the most important one I use is the 10-day, 15-minute time frame. I will come in here in the morning and I will zoom out. I try to look back at just about 5 or 6 days, okay, even though I do it on 10 days, I'll zoom in and I will clearly see. All right, I'll zoom in just a little bit more for you guys. Actually, I'm gonna leave it at 5 days, but you can clearly see where we are in the morning pre-market. And I know we have yesterday's high, which was a clear supply zone. All right, we channeled across of it just a couple days prior on the 29th, bounced off of it a little bit. We rejected and broke through, okay, overnight, which you can look at the futures to see this. Overnight, gap down, a little bit of chop, came back up, rejected it twice. Okay, so this is an indication to me that if we're down below this again, there's a possibility that we can reject off this zone again. So therefore, I come in here with my drawing tools, I go over to the box, and I draw my box. Now, the same thing if I'm looking to buy calls. Where was the last time that we call scoop from? Where was a good demand zone that showed that buyers were ready to step in? Same thing, a little bit different here. I not only have, okay, the previous day low, which it might be 2 or 3 days out. This is just one indication. We'll go over another chart in a minute. But I also have, considering this is the SPY, the futures. I will look at, /ES as well, just to get the zones a little bit better, okay? Very, very simple. Now, here's the other thing too. What happens if those zones never hit? It's very simple. You don't take a trade. You don't try to force something because you think it's going to move some way. That's how too many traders lose money. Very simple. Just because you're trading or you're day trading doesn't mean you have to trade every single day. Okay. Here's another one. I'm going to look at Apple. I zoned this out this morning. It was beautiful. Okay. But as you can see, I found my supply zone from the previous day. It might be 2 days, depending on where we up. If we gapped up and we were opening up at about 138.50, my supply zone would have been between 139.80 and probably 140.50. Okay. But we weren't. That's why I'm choosing the previous day. It doesn't always have to be the previous day. It's just an example right here. And as you can see, we were below that, gapped up, immediate put, paid. Well, why don't I have a zone to the bottom? Here's where things become a little bit choppy. One, because I really thought this 134 was just going to be a little bit low, and I didn't want to play calls if it got down to that side. And that's okay, because you don't have to make a play on every single stock that you take. Okay, so I encourage you to do a couple different things. One, chart these out. 10-day, 15-minute charts. I really like to look back really just between the last, 2 and 5, or the previous day and within about 5 days as the zones are a little bit stronger. Okay, if you are playing the QQQs or the SPY, you can look at the futures /ES or /NQ. It'll give you a little bit better of an idea because they're 24/7. And I encourage you guys to chart these out and see how they play. Take 1 week, just 1 week, to chart them out. You don't have to play these trades. Just look and see how the price moves. See if you can get a feel for this. The risk reward to this is amazing. I said to somebody inside the group just the other couple days ago, I said, listen, win or lose doesn't matter. Okay. Part of trading is a probabilities game. All right. It's the same thing as running a business for all you business owners out there. It's a probabilities game. I know that 68% of the time, according to my journaling, I use TradeZella, 68% of the time I have winning trades. Okay. And as long as I can keep my losers below my winners, okay, then therefore I won. So if my average, winner is 22% or 24%, as long as my losses are anything lower than that 24% or 22%, I won. It means I'm within my strategy. And I know that over time, tested time with how I trade, I will continue to be profitable. Okay. There's too many traders that probably have over 50% of the trades are winners. Okay. But you're cutting your winners at 10%, 20%, 30%, or you're letting them go to 100 and thinking they're going to go to 200, and then you cut them all the way when they're even. Okay. But they're letting their losers go to -40, -50, -60%. Okay. When in the macro, in the bigger perspective, you're winning most of your trades. You're just letting your losers go too much. So I encourage you to check out the strategy. There are plenty of more videos on this, supply and demand. I feel like this is very, very simple. I've seen too many charts from people, and they're looking for, this golden, flag just to come across their chart to say, yes, you've got 14 indicators, all this matches up. And by the time, you have all these boxes checked, the move's already over. The stock market's not going to wait for you guys. So Like I said, I encourage you to go check this out. If you have any questions, leave a comment down below. I'll be more than happy to help you out. I'll see you in the next one.